This is gonna be real go live-ish. So I'm gonna look at this, and if it's not go live-ish, I'm doing it again. So let's get into it. It's gonna be kind of interactive, and I have some questions. I have a question, and don't all unmute yourselves at once and say the answer. If somebody unmutes, just let them speak, and then if they get the right answer, they get the right answer, so on and so forth. So I have a question. What is Forex?
For the foreign exchange market, yes, please, thank you.
Okay. Now, what is the foreign exchange market? Okay, Richard owning. So we trade Forex. Forex is short for foreign exchange. What is foreign exchange? You're trading foreign currency. Now, when we're trading foreign currency, that means simultaneously we are buying one currency and selling another. And one thing I want to point out before I go into anything on any website is that I don't want to explain this. Like I said, we're buying one currency, selling another. These things are transactional. In the past, you had to go to a booth. You have to say, okay, I want to trade this. I want to trade that, this. And that's traditionally how it worked. But now we have access to that in a shorter time frame and more convenience. So when I open this up, I want to see something. I want you to see something. These candles, let me clear this chart. All right. So these candles, matter of fact, I'll clear everything off. So these candles that you see here, these are visual representations of each transaction happening simultaneously. I want to let you know something. What you see here, these markets that we analyze, these candles that we read, it is all data. There's no mystical powers that just magically move the markets and so on and so on. No. When somebody goes to a booth and they say, I want to exchange just for that, they participate in one of these candles that you see. One of these candles is worth, let's say this is a 2-hour time frame. So each candle is worth 2 hours. So let's take this and let's take this one for instance. And this is much more complex. I'm just gonna simplify it. This candle right here is 2 hours of everyone that bought or sold the US or silver rather. Let's take an actual pair. Let's take an actual Forex pair because this is a little bit different. This is metals. Let's take something like this. GBP USD. 2-hour time frame. So one of these candles is exactly all the transactions that took place in the world hold up. Oh, I don't like when this happens. All right, this is July 21st, July 9th, 2021. So every transaction that happened July 9th from 3 to 5 shows up on that candle. So since it's green, that means a lot of people bought GBP, sold the dollar, vice versa. Let's look right here. Let's look current. Let's look, current circumstances where it's at right now. So let's take this green candle. So yesterday at 7, whatever time this is a visual representation of all the transactions that happened at that time. So the point where I'm going with this is that this is all data. And since it's all data, since it's everything that it's just a visual representation of something somebody put on paper, that means that it is readable. Think of it like I'm trying to make this as simple and as possible. I'm not trying not to go too far with this. But think of every candle like words on a piece of paper. You can read the words on the piece of paper if you know the patterns the letters go in. So a word is a pattern that, letters go in. So if you arrange letters a certain way, you make a word. If you arrange a candle a certain way, you make a pattern, which you can read, which you can capitalize on. That is all trading is. That is all market structure is. It's just taking the letters that the candle gives you, making a word, which is a pattern, reading the pattern, reading the word, so that you can then capitalize on it. Let's say that again. All trading is taking the letters the market gives you. So each candle is a letter. And the collection of candles makes a word, aka a pattern. You read the patterns and you can capitalize on the patterns. The more you can identify and the more you can capitalize on a pattern, the more you can capitalize off of. That's just like you go from your sight words to reading books. It's the same concept. So you go from, looking at little baby patterns, and then you can, go into, more advanced concepts. The higher you go, the more money you make. Or it's like the more words you can cite out or cite to read, the more advanced words you can say. It's the same concept. So we're just going to work with this pair today. Maybe a couple of more. Let me see. That's not what I wanted to do. All right. So market structure. I already marked on this. So we're going to talk a little bit about I'm going to start all the way over. Before I talk about market structure, we're going to talk about candle structure because candles make up the market. So let's talk right here. Whiteboard. Candle structure. All right. So what is candle structure? It is how each part of the candle plays into the overall action of market. So that's my definition on candle structure. How each part of the candle plays into the overall action of the market. Now, action, that could be price action, that could be, market manipulation, stuff like that. We're going to talk about all of that. But we need to start from the very beginning. Before we talk about trends, support and resistance, we need to talk about what makes those up. And those are candles. So we're going to talk about a blue candle. We're going to talk about a red candle. Blue candle. Red candle. I know some people's OCD is about to trip them out right now. Let me bring this closer. All right. So blue candle, red candle. We're gonna draw the arrows. I'm gonna draw the little stick things first. Boom. Red. All right. I may end up having to move this over. So, matter of fact, I'll do this. I'll move it on the bottom. I did not do what I wanted to do. All right. Now we're in business. So we're going to draw the arrows. Boom. Move right here. Blue. 2, 3, 4. These arrows are by no means perfect, but they're gonna get the job done. So this takes way too long. All right, so we're gonna start at the bottom. But I'm gonna start right here. So we're gonna talk about the red candle first. At the top of the red candle, since red candles are, going in the downwards direction, they're gonna go down. This is the top. So this is gonna be the open. And this is also called a flat top candle. I know when I normally describe this, I don't usually go into detail on what a flat top candle means, but today I will. So, you might want to write that down. This is the open or a flat top candle. Now, I'm going to talk about all that later. This is the body, and then this is the close. We're going to start up here. This is a wick. So basically, all a wick is just, like I said, these are visual representations of what the market has done. So that means that at one point in time, people were buying one currency higher than they were selling it. Then it came back down to where the time frame closed. That's all a wick is. It just means that at one point in time, the candle was up here, and then it just came back down here, creating a wick. So that's a wick. This is the close of a blue candle. This is the body. And this is the open or a flat top candle. So this is the very, 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 very basics. On a blue candle, it's going up. So this is the open. This is not what I want to do. Flat bottom candle. Flat top is up here. Flat bottom candle, since it's opening up, this is what a flat bottom is. It's the open, this is the body, this is the close, this is a wick. I didn't label this down there because, I just said it right here. This is a close, this is the body, this is the open. So now that we know the different parts of a candle, we can talk about what that means. So we're gonna talk about a line. Let's just say this is a point in structure. I'm gonna go over what point of structure is, but we're just gonna point of structure. So we're gonna call this a point of structure. Now we're gonna have a blue candle. We're gonna have a blue candle, and it's gonna close right here. And then I'm gonna do this. All right, So let's say we have a blue candle. And this blue candle is approaching a point of structure. Now, this blue candle, we know that this bottom is the open. We know that this part is the close. So when we look at this candle opposed to this point in structure, this candle did not close above this point in structure. It closed below this point in structure. But one thing I want to point out is that just because a wick crossed above a point in structure does not qualify that candle to close above that point in structure. The physical body has to close above that point of structure in order for things to change. Now, I want to draw another example. This right here means that this particular candle closed above this point in structure. I want you to notice this difference. I'm going to explain what the other side of this later, but this did not close above this point of structure. This one did, because the physical body came above the point of structure. The same thing happens on the flip side. So let's say I have a red candle. I have a red candle. This candle did not close. I'll just do the same thing I did over here. This candle did not close below this point in structure. It closed above. Just because it wicked does not mean that it closed below this point in structure. However, if a candle does like this candle closed below this point in structure. Only when a candle crosses a point in structure does something change. I didn't say wigs. Only when the candle crosses does stuff change. And I'm going to tell you what changes. Let's say I have the same point in structure. That's not what I wanted. Let's say I have the same point in structure. And I have a blue candle. I have a blue candle that did not close above the point in structure. The next candle will form, will start, will open below the point in structure. It could go like this. It could go like this. But what you need to know is that the next candle will open below the point in structure because the previous candle closed below the structure. I always get those two confused. Now, same thing happens if I was to do the same thing with a red candle. If a red candle does not close below the point in the structure, the next candle, you see, somebody said something in the chat box. So, yes, I'm getting there. I'm getting there. I'm getting there. Bet. So, the next candle is going to open above the point in structure. Let's say this one is, I'm going to say it like this, just so nobody is confused. All right. Now, on the flip side, if a red candle closes below a point in structure, the next candle is going to open below the point in structure. However, or additionally, same thing for blue candle, crosses a point. Oh, I'm using the wrong mouse, that's why. Same thing happens over here. It's going to open on the other side. Can you use filled in rectangles? How do you stump me? You stump me. I don't know how to use. Oh, is this a filled in rectangle? Yo, you taught me something. You taught me something. You taught me something. That's crazy. This is gonna look so much cooler now. I'm over here using basic rectangles. So you see how much cooler that looks now? Like that's crazy. But let me go ahead and fill this in. Yo, shout out to Jahidi, bro. She just taught me something on the Zoom training. Oh yeah. Yeah, Jahidi, you got brownie points too. Yo, what if Jahidi can keep brownie points, bro? Yo, that's crazy. Jahidi got 50 brownie points. Shout out to Richard, bro. I know Jahidi probably like, bro, I got I got 50. I got 50. Yo, that's crazy. And what's crazy was I would have never even came up with something like brownie points. But okay, I'm gonna fill in one or the other. But this is what happens. Doesn't close, doesn't cross, this one won't. Same with the red candle. Doesn't cross, don't expect the next candle to cross on the open. So if a blue candle doesn't cross, don't expect, it's gonna open on the same side it closed, basically. But if it crossed, it's gonna open on the same side that it crossed. So if it crosses, it's gonna open on that side. Cross is gonna open on that side. I know. But yeah, that's pretty much it as far as candles are concerned. Now we can go into the real stuff. Now we can go into the real stuff. Does anybody have any questions? All right. So now I plan on going like super deep with this, but we're gonna talk about SRTs. We're gonna talk about SRTs. So what are SRTs? Somebody tell me. Before I go to SRTs, what are the three phases of the market? Somebody let me know. Okay. Okay. I see y'all. I see y'all. Hold on. Hold on. Let me find out. Let me find out. See. All right. Man, y'all making me proud, bro. Y'all some traders for real. But like they said, uptrend, downtrend, consolidation. We're gonna talk about consolidation first. Consolidation, aka sideways price. So when price doesn't have any upwards or downwards bias, it just moves from side to side, sideways. So that's as best as I can put it. And that's consolidation. Now I'll label it. Next is a downtrend. That means it has a downwards bias. So it's not necessarily going from side to side, but if you were to play connect the dots would form a downward shape. That's what a downtrend is. Now, an uptrend is the exact opposite. The exact opposite would be the markets. If you were to play connect the dots, they would have an upwards bias. Now, one thing that I will say is that the majority is uptrends and downtrends. The minority is consolidation. So whenever you see consolidation, that means the flow of the market is about to change. We talked about this on the Liberty training that I did, I think it was last week, or this past week, rather. So when you look at WebSlinger, it'll have one of those little breakouts where you can like, oh, boom, then it'll touch, and then boom, boom, you can touch, boom, and all of that. Then like if it crosses your trend line, it's gonna go sideways and then it's gonna turn. The same thing happens on here. It's just that we don't have the web strings. And I want to make this point. TradingView is not bad. TradingView is not bad. It is a resource for you. It makes things so much clearer. You can pay for it. I don't pay for it because I don't really see a point. Now, if you're a trader and you want to actually go and really study the markets, then you can get the upgraded version that comes with rewinds. But if you just trading with it, it's not bad. It's not bad at all. So remember this. When you in a trend, you draw your trend line. When the market crosses your trend line, it's going to go sideways. Once it goes sideways, it's going to turn. So look, boom, it respected the trend line until it crossed. When it crossed, what happened? It went sideways. What happened when it went sideways? After it went sideways, it turned. Just got to remember that. And the same thing applies for consolidation. Whenever market crosses consolidation, it's going. Then but on downtrends, I like to do downtrends. I like to draw the trend line up here. So that way, the concept will still work. If it crosses the trend line, it's going to go sideways. Once it goes sideways, it's in the process of turning right now. But it's going to come back. And see how it always kind of respects the trend line. Well, it's not a trend line, but it's just a point in structure. That's the next point I was going. So when you're trading, I know I said we're talking about SRTs, but that's just a formality. When you're talking about trading, you don't want to say you only say, but you're gonna find a lot of times that people just say point in structure, because a lot of times support, resistance, and trend lines are interchangeable. And if they're interchangeable, you either got to know which is which, or you just got to have one umbrella term. And that umbrella term is just a point in structure, just a point in market structure. So this line right here, this consolidation line, is a point in structure. This trend line right here is a point in structure. This consolidation right here, point in structure. This right here, point in structure. It's all market structure. What's up? You want to say hi? This is my cousin. My class? What's up? She's in there somewhere. All right, but all of this is points and structure. Bruh. You don't want no smoke. You don't want no smoke. But yeah, all of this is point and structure. So just like how I said, oh, it's a lot to remember. Okay, this is a uptrend line. Oh, this is a consolidation line. Oh, this is a downtrend line. Oh, this is this consolidate. No, it's a point and structure. Oh, look, point and structure. Look, point and structure. Look, point and structure. Now, we just talked about what all of this is. This is an uptrend line. Whenever it crosses the line, it's going to go sideways. Then you got this line right here. This is a point and structure, aka a support. We're going to talk about that next. This is a point and structure. Once it crosses the consolidation line, what happens? It's going to turn. Guess what? This is a downtrend line. Once it crosses the line, it's going to go sideways. Guess what? You got your consolidation lines. Guess what? Once it crosses the consolidation lines, it's going to turn. Now, what we're going to talk about next is this is called consolidation, but this is where it's going to get more familiar. This is your resistance, and this is your support. So yes, they're your consolidation lines. What is consolidation? Whenever price never leaves your support or resistance. That's consolidation by definition. So look, once it enters this zone, guess what? It really doesn't leave until it gets ready to what? Turn. So guess what? These are your support. This is your resistance. I mean, this is your resistance, this is support. Now, you also have support and resistance in trends too, but this is the easiest. We're going to talk about what a support and resistance looks like in a trend. All right, let me see. Let me find a good example. Because I'm gonna give you, just like I did the anatomy of a candle, I'm gonna give you the anatomy of a trend. We'll go to a lower time frame. All right. I want to do a big one. You want a big trend? Let's go down here. I lost Bitcoin. Oh, what happened? Reset chart. Move drawings. What happened here? What? Why is this down here? There it is. All right. What are you doing? All right. Let's talk about some trends. Hold up. All right. We're gonna talk about this one. Right in here. Who said something? Yo, Bitcoin has been in a downtrend. So we're gonna take this. Well, I'm gonna draw it first, and then I'm gonna show you the realistic factor of it. So this is how a trend is going to look, or something similar to this sort. No cap. Why did it expand the chat? Okay. All right. So we're gonna get. Where'd my chart go? Oh, there it is. Boom. Block. So this is how a trend should look. boom, 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 something like this. In a downtrend, so something like this. Boom, boom. That's crazy. That macaroni and cheese. uh, they didn't have no oven.
They need some seasoning.
Some seasoning. All right. So this is how a trend should look. So it should go up, down. You already know all that. And we talked about the trend lines. We talked about all that. We talked about all this. But here's where I kind of want to, go into it. So, like I said, you have support and resistance and trends, but for the sake of it, we're just gonna call it points and structure. Here and here. I'm gonna delete these. Here and here. All right. I heard him. But look, these are your points and structure in a trend. Whenever it goes up, it's gonna come down. And whenever it makes its move, it's gonna come back down. And this is where we're gonna talk about how you can start to get entries later. Dang, it's already been close to an hour. Yo, that's how I know it's about to it's gonna be a long training, bro. All right. Well, look, whenever it comes back down, typically it's going to come back down to the previous higher high. And I'm gonna tell you what that means right now. So whenever the market in the uptrend, let's take the uptrend first. At the highest point, when it comes down and it shoots back past this point, it is now considered a trend. So I'm gonna run that back right quick. I'm gonna run that back. So let's say none of this other stuff existed yet. When it comes up, retraces, and shoots back past this point. Let's say, do all that. So let's say this only went to like right here. It won't be considered a trend. But let's say it shoots past this point right here. It is now considered a trend. Now, what is this? This is called a higher high. I'm gonna make this smaller. That is too small. 20. There we go. So this is called a higher high. And all you need to know is just that it is the highest point, one of the highest point in a uptrend. This right here is called a higher low. All a higher low is just a low point in an uptrend. A higher high is a high point in an uptrend, and a higher low is a low point in an uptrend. Same thing up here. Whenever it makes a new high, this is now the higher high. Let's say whenever this retraces, this is now the higher low. Same thing up here, higher high, higher low, until guess what? It just tapers off, and now this is just the high, and now this is just the low. Now, if we move on to the downtrend, when it goes down, retraces, and then comes back down, this one right here is called a lower high. Where's it at? 20. This is called a lower high. And whenever it goes lower, this is called a Oh, because I got it locked still. It's called a lower low. Same thing, shoots past, this is the lower low. Retraces, this is the higher low. Same thing, lower low, higher low, and then this one would just be the low. Now, another thing that I want to point out is that in an uptrend, whenever it goes opposite of the trend name, that is a retracement. So let's say it goes up, comes back down, that is a retracement. Same thing, whenever it goes opposite of the trend name, is a retracement. Downtrend and it goes up, that is a retracement. So that is kind of the anatomy of a trend. So let's talk about how trends actually work. Wow. At least the fish tastes all right. Okay, so look. Boom. We're gonna say that this is the high. We know this is the high over here. Matter of fact, I'm gonna start all the way over because we're gonna talk about how to take advantage of trends. So this is the high. So this is the high up here. This is the high. This is the lower low, lower high, lower low. Actually, no. Hold on. I can't see. This is too big. Let me forget it when this is locked. All right. Let's see. Zoom. Okay, this is a lower low. So boom, higher low, lower low. Oh, it's not locked. See, that's one thing I don't like about trading view. Lower low, lower high, lower low, so on and so forth. Lower high, lower low. Now all of them are as steep, but they're still downtrends. And as you can see, when they retrace, they typically go to the same level. Look, support, support, resistance, support, resistance, resistance. That's why we call them points in structure and not support or resistance. Because look, boom, boom, boom. You can see another point right here. Support, support, resistance. And then here's another support down here. So it's just, I'm ready to get into it. Sometimes I be tired of basic, but y'all gotta know it. Cause I'm gonna start saying some stuff and y'all gonna be confused if y'all don't know it. All right, now that we talked about that, we can talk about one of my favorite things to do. Is trade a trend. It's my favorite thing to do. All right, boom, boom. All right, here's a perfect example. Wow. Look. Wow. Wow. So right here, came down, lower low, look, boom. Came back, boom. Came back to the same point, boom, boom. Came up to the same point. I can even mark it right here. And then this does that all the way down until it goes sideways. Once it goes sideways, you know how that goes. Oh, another thing I want to say. When you're drawing your points of structure, they're never going to be a straight line. Market structure is rarely ever a straight line. It's more like a zone. So I could do this and it'll still be, that particular point of structure. Because, we can see,
Ma'am.
hold up. But yeah, this will still be considered a point in structure. But this is just a point. This doesn't encompass all of it. So what you could do, or what you should do, is this. Let me see. Something like this. And then move it. Wow. Something like that. Same difference. It's just that it's not a straight line and it's a zone and it kind of encompasses all of it. So let's talk about the real stuff, bro. I'm ready to talk about how you could take what we just learned and start trading off the rip. So drop a 1 in the chat. Wait, because sometimes questions get lost in ones. So if you have any questions, unmute yourself, say so now, because I'm about to turn up and I might save questions to the end. All right, no questions? Cool. Whew. So, okay, hold up. If you're ready to know how to trade, bro. Ashley. Oh shit. Dude said Marquis about to go Starbucks mode. But look, yo, I'm about to go crazy. So drop a number 1 if you really want to know how to trade. Like for real, for real. Like for real, for real. Like for real, for real. You want to control back. All right. Let's get it. Let's get it. So drop a number 2 if you remember PIMDAS or PIMDAS or whatever you call it. Yeah. Okay. So right now, we're gonna talk about L.I.T.S. We're gonna talk about L.I.T.S. So what is L.I.T.S? L.I.T.S. Liquidity, imbalances, trends, and structure. L.I.T.S. Now, we're gonna talk about L.I.T.S. Liquidity, imbalances, trends, and structure. So, like I said, the markets are not hard at all. The markets are visual representations. Think about it like this. Think about it like this. Think about it like this. We all know what this is about to be. So, you know the four-way cash flow, right? The four-way cash flow is just a chart. It is a visual representation of how money is distributed. And we all know and we talk about that chart because we're able to read it. Now we're going to talk about how the markets all form patterns. All we have to do is read those patterns and take advantage of the market. So let's talk about it. And we're not going to do it on Bitcoin. Let's take my favorite pair, silver. Let's take my favorite pair. So we talked about the phase of the market. We talked about all of this. We talked about all of that. So I want to talk about, and this is going to go in order. So the same concept as PIMDAS is going to be the same concept as L.I.T.S. So when you look at the market, you're going to look at the first thing is liquidity. So what is liquidity? That is a collection of money. Liquidity, liquefy, is just a collection of money. Now, when you look at the markets, there's a lot of money hidden in the markets. See, we are not the big boys in the market. We're not. This is how I say it. We're literally stealing from the market. We're stealing from the people who move the market. So when you go and you get into something you're not supposed to, you're gonna go take the whole thing, or you're gonna take what they want. It's a mosquito. Or you're gonna take what they're not gonna notice. You're gonna take what they're not gonna notice. So if we gotta play smart in this. And this is the same concept as the banks. See, I think, and I'm not going to go against any educator. This is just my philosophy. And if I meet an educator and they tell me I'm wrong, then, I'll just let it be that. But the banks do not trade. I'm just say that right now. The banks do not trade. They steal and capitalize. See, the banks, they're not going to risk all of their money like we do. They're not going to risk 2%. They're not going to risk 5%. They're not going to risk none of that, because if they risk 2%, if they risk 5%, they're throwing millions of dollars down the drain. They're throwing billions of dollars down the drain. Think about that. You taking 2%, 5% of $100, of $50. They take it 2, 5, 8% of millions and billions. So they're not trying to come off that bread off the off chance that they might get some money. So what they've done is they say, you know what? Here's all the money sitting right in front of us. Because like I said, and this is what I tell people building a business too. When you build a business, you can have all the dreams that you want. But when you walk into a professional setting, they do not speak dreams, they speak numbers. And the same thing happens in the market. When you walk into a professional setting, especially financially, they speak numbers. And what did I say the markets was? Their data. What are the candles? Visual representations of the data. So what do? They find the most opportunities where they can capitalize on the money that's already here without risking money that they can potentially lose. So how do they do that? How do they do that? And I'm gonna show you right now. We just learned right now. This is a level of resistance. This is a level of resistance we see in the market right here. This is a level of resistance, and so is this. However, you have instances where it'll go like this, it'll go like this, it'll go like this. So here's what happens. Now I'm gonna take this one for instance. I say, all right, here's a resistance in the market. I'm gonna go ahead and I'm gonna place my where's my here. I'm gonna place my stop losses all up here. Place my stop losses all up here. Cool. I made a little bag. Now, guess what? This is a level of resistance. So I'm going to keep putting my stop loss right up here. I'm going to keep putting my stop loss way up here. Because guess what? This is a level of resistance. I see plenty of resistance down there. I'm pretty sure if I move over here, it's going to be plenty more resistance. Look, point of structure right there. Point of structure right there. Point of structure right there. This is all valid points. So I see no reason why the market shouldn't rise back up to this point. However, you are not the only person that sees that. Because what's going to happen? Like I said, the banks do not trade. They steal and they multiply and they take advantage of. So guess what? Just how your trade was up here, your stop losses was up here. Here's all the money right there. Because people placing their stop losses up here because they think the market is going to come back up here. But guess what? This is y'all's favorite word, and y'all can never explain it. Market comes. Where's it at? Market comes exactly where you want it to, stops you out, then continues back. in your direction. Why do you think that is? Why do you think that is? It's because the banks realized what y'all was doing. Y'all place y'all stop losses way up here. Matter of fact, this the wrong little thing. Look, all the money is up here. That's where all the money is. So the bank's like, I'm not gonna trade with my money. I'm gonna come steal theirs. Because think about it. Think about how many people put their stop losses up here. Now, what is that saying? You 2%, 5%. And there's thousands of people putting that money up here. So I'm gonna do this. I'm gonna take them out the market, take their money, and then I'm gonna capitalize on this. And it'd be about the same amount of pips. Like, think about it. This was a 900 pip move. Look at this up here. It's about a 900 pip move. It'd be the same amount of money. It's just the bank saw what you was doing, took the money, came back. And the same thing happens all over the markets, especially in trends. But trends are harder to, they're way harder to capitalize off of. Like, there's plenty of ways I can do like this. And look, you could do, like, I talked about the line, but you can actually do a channel like this. And you see how it typically respects the channel. However, there are a couple instances where they don't. And this one right here is actually an opportunity similar to the last one. So just how this was a point in structure, this line down here is also a point in structure. So just like how you would look at the market, you say, all right, this is a downtrend, so I can expect it to go down, but I can also expect it to retrace, and I can kind of count on this level right here for the trend to continue. They say, okay, I got you a trend. And then guess what? They see this right here. You got all these stop losses down there, and they capitalize. And this is XRP. I thought this was silver. I was wondering why it looks so funky. This is XRP. And what do you think? What do you think consolidation is? I mean, the same thing happens. So like trading is just about, recognizing the patterns. So watch this. I'm gonna go back because that was actually a decent example. I'm gonna go back. So watch this. How do I avoid this when I'm trading? Is if I know that a lot more people are looking at this and they're stacking their stop losses up here, and I know that there's somebody out there stealing people's money, that means I shouldn't be looking at this, but I should be looking at this. And that's where a lot of traders, this is where the 90-something% comes in. See, they see this, and then they fall off because stuff like this happens. But you need to stop looking at this. This is chump change. You start looking at this. This is where the real money is. It's like imagine a police escort. When you're riding in traffic, nobody likes traffic. But when you got a police escort, bruh, doing a dash ain't the word. Think about it like that. You're just following in the footsteps of the people with the real money. Hold up. Is that the retracement? Hold up. My mind is blown. Shout out to y'all. Would you suggest no SL? No, I would never suggest no stop loss. But notice how funky this looks. You can see how this is kind of looking like a trend, but it's not. It's not necessarily a trend, and it hasn't went sideways. It should be going sideways, but it's not. That's the perfect time that the banks are going to capitalize. Because look, boom. So liquidity is just taking your eyes off of this and putting it on this. And I'm gonna teach you a trick. And this is where the next one is gonna come in. Because I didn't put this in, but there's a reason why price came up here. And I see it. It's this. This little green cube right there. See, look, no. See, Jahida be ready to risk it all. She said it in the testimonials chat. But look, once you shift your focus, everything changes. Once you shift your focus, everything changes. So not only do you able to capitalize off a position that most won't capitalize off of, but your room for error has also decreased dramatically. So you go from 35 pip stop losses to 20 on a cryptocurrency. Have you ever traded crypto? 20 pip stop loss on a cryptocurrency? Look at that. No drawback, no nothing. And then look, you capitalized 900 pips just by knowing this. And I'm just on the L. I'm just on the L. But the power in knowing what to look for is honestly crazy. So honestly, you can lump stuff like this in with liquidity, because once you find out where the money is, there's also because I'm gonna say this too. The market has magnets. Undisclosed location, but I got you. Um, but yeah, once you know where to put your eyes, once you know where the money is, and I'm gonna teach you this trick. If there's money there, there's something that's pulling the banks there. So we saw that the money is kind of sitting up here, but the bank's just not gonna go up there for nothing. That's where this comes in. This cube right here. This cube is the magnet that brought the markets up here to take the money and then melt. So when there's money, there's something bringing it there. Oftentimes is this, but sometimes it's the I, which is imbalances. Now, what is an imbalance? An imbalance is just a price that hasn't been filled. So this will be an example right here. So right here, you would take, I'm gonna take this green candle right here. This green one, see how it's a big candle and these wicks don't close in this particular body of the candle? You would just take a line, mark the top of the previous wick, and then mark the top of this one, and in between this yellow would be an imbalance if the market had not come back to fill it. So if this had still been going up, this would still be an imbalance. But since the market came back down, boom. So that's another attraction point. See, the market was way up here. And this is another thing. All right, I'm going to go over this next. But market was way up here. Why did it come back down? Because this magnet right here. The bigger the imbalance, the bigger the magnet. This one is a pretty big one. So that's why the market came down here. Now, watch this. Market came down all of a sudden for 500, almost 600 pips. So where the real money is just knowing where the money is hidden. So you don't want to go for the gold that's in the ground. You want to go for the gold that's in the treasury, because the gold that's in the treasury is always worth more than the one that's in the ground. All right. But yeah, you want to find the stuff that's hidden, because what's hidden is always good. I'm not going to say it's always good, because a lot of stuff that's hidden is bad. But what's hidden is valuable. I'm going to say that, because that's more true. That's truer. But yeah, bigger the imbalance, the bigger the magnet. Came back all of a sudden for, guess what? Almost 600 pips. Now, we're going to talk about how you could have gotten a sniper entry off of this. So, market came down, came back up, and created the imbalance. You would have said, okay, market created an imbalance, it's going to have to come back and fill it, but since it did it right now, where is it going? That's a question you're gonna have to ask. You're gonna have to ask yourself in the markets a lot. Is where is the market going? Now, like I said, there are different patterns. Thank you, man. There are different patterns that you can capitalize off of in the market. We've talked about the cube. We talked about the imbalance. Now we're going to talk about this. Whenever you have a strong up and a strong back down, that is another sign, like this right here. So what you're going to do is you're going to take your line, put it at the top. Then you're going to get your fib. We're going to talk about the fib next. And you're going to measure the red candle. You're going to go from the bottom to the top. And then you're going to draw the 50%. Wherever the 50% is, mark it. Now you're going to enter no. Yeah, body to body. So whenever you're going to draw a line at the top off rip, but you're going to get the fib and you're going to draw it from top to bottom. Draw from top to bottom and then mark the 50%. Once you mark the 50%, you're pretty much good to go. What you want is you want to go ahead and get your entry. I wouldn't enter right here. This is a conservative entry. You're going to have a bigger stop loss if you enter right here. What I would do is I would enter 50% of this just for a tighter stop loss. So 50% of this is right here. So I would enter at that 50%, and then I would put my stop loss just above this, where it wicked at, because this is always going to have a wick. So it's always going to have a wick. Notice that it's always going to have a wick. And if it doesn't, just put it just above. But most of the time, it's always going to have one. Put it just above it. And then what you're gonna do, where your take profit is gonna be, is you know that imbalance we were talking about? You're gonna get your fib again. You're gonna take it out. You're gonna go from the top of the bottom to the lines you drew, and then you're gonna go to the 50% and draw another line. And that's gonna be your major take profit. And oftentimes there's gonna be a point of structure, which you can see right here. So your 50%, really all three lines are gonna be a point in structure, but your major point in structure is gonna be the 50%. Because if I extend this, you can see it down here, point in structure, structure. But your take profit is going to be the 50%. Your take profit 1 is going to be here. Take profit 2 is going to be here. Take profit 3 is going to be here. So it hit take profit 3 for 837 pips. And your stop loss was 181 pips. Let me double check. 183. Stop loss 183. Take profit 800. So almost a 5-to-1. What that means is you're making 5 times as much as you risk, almost. But yeah, that's one of them. But what we're talking about is mostly the eye. So whenever you have an imbalance, do the little top, do the bottom, mark the 50%. That's always going to be your take profit. Your liquidity is going to find your entry. Your imbalance is going to find your take profits. Let's do a regular pair because crypto is kind of finicky. Let's do Forex. This is a Forex call. GBP USD. All right. We're going to talk about the fib for a little bit. And we're going to talk about, a couple more things. But let's go through and let's mark. So one thing that I see, I'm going to just go from what I see here. Strong points in structure have more than 3 touches. And even still, this is a rule of thumb. No point in the market has never been touched. So every point in the market has been touched as some way, form, or fashion. We're going to talk about how to take entries on all 3 phases of the market. And then we're going to go ahead and we're just going to call it. Yo, some people hopped off. All right. So let's take this. Let's take this. All right. So here's a quick thing, and this is going to be kind of confusing when I say this. A point in structure is a strong point in structure when it has 3 or more touches. However, the more touches a point in structure has, the more money is going to be anticipated for the next touch. So this one right here goes up, comes down. Guess what? A lot of people are going to be like, all right, this is a level of resistance. So when the market comes back up, they're going to put their stop losses up here. Cool. They would have won. Came back down, they could have capitalized. Boom. Now, a lot more people are going to be looking for this as a level of resistance. So they're going to put their stop losses up there. Boom. Guess what? Boom. They're doing it again. Then look, here's what happens. And this is what I like. See, they'll always give you a warning, but now everybody picks up on the warning. See this right here? If I go to it would have told me right here. All right. Would you say the more it touches, a certain spot gets weaker? No, it's just a matter of your perception because the more it touches, the stronger it gets. It's just you're looking with the wrong eye. The stronger it gets, the more money is going to be put there. The more money is going to be put there, the more the banks are going to want to take people out and come back and capitalize. So the more money is sitting right here, because it's collecting money for 4 touches. And I'm gonna show you something with this stochastic RSI too. The stochastic RSI, I like it because this is probably the only indicator I use. So look, if we're looking right here, you want the markets, whenever it's in consolidation at least, to kind of make its way all the way down. However, over here, you see how it hit the resistance, but it never touched the resistance line. If you look right here, like this, it never touched the line. And it kind of went back and forth. Now, if you look this way, it touches the line every single time. Touches the line every single time. But how in the world did it go past? Hold up. Where was I at? All right. How in the world did it go past the support and resistance right here? How did it go past the point of structure but didn't touch the line? That's when I'd be like, okay, something going on. Then look, boom, it has an impulse drop. Then it came down here. It never left the purple. Then look, we saw this from earlier. Down, come up. We could have caught an entry right here too. If really wanted to, I wouldn't have, but that tells you that the banks are in here some way, so form or fashion. Because I see this pattern right here. And guess what? It touched this 4 more times, but it never touched the line. So that tells me something is wrong. So I would have got out of the market. But then guess what? Banks came to collect. Then what happens? It melted, creating an imbalance. Created the imbalance. If you wanted to, you could have taken a position off of here. Okay, cool. Right here, where is it going? You see that it's about to be overbought. You know that it's coming over here, so you know that it's probably going to touch this line. So you could have caught a quick little 50 pips. Is this your own strategy? No, it is not. But yeah, that's pretty much how it goes. Look down here. Oversold touches the line. Stuff like that. Look, here's another example. Here's another pattern. Look, dip. We saw this pattern before. We know what this looks like. So look, it's at the point of structure, but it's not oversold. It didn't touch the line. So I'm already at alert. Then look, it goes sideways. Look what happens. Boom. Now when you see a long candle like this is a bank move. So look, I create an inbound. I create my little line right here. I create my little line right here. I could get my fib. I'm gonna go ahead and get my fib. Draw the 50%. So for the future, I can use it as take profit. Look, boom. 50%. Look, it never hit it for right now, but it's gonna come back up there after a while. What is it doing now? Okay, so it's gonna turn. Yeah, most definitely. It's in a trend. But when it comes back, it's gonna come back up here. But there was something I was gonna show you. It was a pattern. Where'd it go? Oh man, where'd it go? Oh, here it is. So this is probably the last thing I'll say. Um. Oh no, one more thing. Bless you. All right. Here it is, right here. Alrighty. This is the W pattern. Yes, ma'am. I'm almost finished though. So this is the W. This is, you know, it's all right, but it's not. It doesn't pay as much as that other stuff does. So look. Bye. Boom. Hold up. Where'd it go? So that's what it looks like. Me too. Ashley said that fish was nasty. Not the fish, the macaroni and cheese. Santa's. She gonna say Santa's. All right. All right. So it comes right here. Boom. Makes like a little W pattern. But when it gets right here, oh look, here's another one. When it gets right here, it typically melts. Whenever it gets to this side, like right here, it melts. Same with an M. Boom. And then it just goes up. I don't know, bro. I don't know. Oh, for sure. But yeah, that's the W pattern. Once it gets to the top of the W, it typically melts. But here's another thing that I will tell you. Look at that. Look at that right there. Oh, it's locked. So let me do this. Look at all that money. Santa's. No, it was this trail riding club. They had a fundraiser fish fry. So I said I was, huh? No, it was some other one, and I said I was gonna go there support. But yeah, this is look all this money right here. I would not be surprised if it came up here, came and grabbed it. Ooh, that y'all look for this on GBP USD. Y'all look for this at GBP USD. First off, I see a couple things. Look at this. It never made a higher high. So it's money sitting up here. If I see the money sitting up there, it's gotta go somewhere. It's gotta go somewhere. But where's it gonna go? I see somewhere, but where's it gonna go? It's gonna go right here. Let's look at the cube. Okay. It's attracted to the cube. And see, look, I would be looking at this. I would be looking at this right here because we're talking about this, but it's already been filled. See, when it's been filled already, it kind of cancels out that. So what I would have done if this hadn't been filled, I would have did the whole top bottom 50% thing, and I would have did an entry off of that. So what I would want to see this do, let me see what it's talking about right here. Fight back. All right. Let me see. So yeah, it didn't even touch the line. So what I expected to do is I wanted to come back down here. It's searching for something. Oh look, bro, hold up. I'm on to something. Look at that. Imbalance right there. What? 6 lions walking across the road. I'm in the wrong road. If it's 6 lions walking across the road, I'm on the wrong road. Oh, that's perfect. Look at this. Like, one thing I'm gonna tell you too in the markets is that L.I.T.S is always there. You may not find it on the time frame. You may not find it exactly where you're looking at, but it's always there. Always. Look, touch, touch. What does that mean? So here's the play. And I'm gonna confirm this on the other time frame. I might take this trade. This is a few trades in one. So here's what I wanted to do. It's coming up off of this right now, but I wanted to come back down here. Let's see what the 4 hour talking about. Yo. 4 hour talking about a sell. Look at this. Peep game. Gonna come down here, capture the imbalance, capture liquidity. And it may continue on the trend. It may do that. It may. But when it turns around, I know this is for sure. This is for sure. But if it turns around, it's coming back up here. You want to know why I think that? Because when you look at the W pattern over here, typically what happens when you have a W pattern is that it looks like a W. It looks like one, but this one doesn't. This one just looks like a downtrend. So I'm saying, like, what happened to the other part of the W? That's the imbalance right there. But this is what I'm concerned about right here. Because what happens when a trend turns around? Where is it going to go? Tell me this don't look like no W. Tell me that don't look like no W. Hold up. Wait a minute. Let me make sure. Make sure I get this right. Cause I want to get this right for y'all. Hold up. You gotta get a fib. Try this out. 50%. All right. Tell me that don't look like no W. You don't look at WD, y'all. It look like a W. Bro, this strategy is goated, bro. I can even, bro, like, bro, like, this is goated, bro. Sometimes literally, but the only letters they form like literally are M and W. But my, like some like trading, like it's like you know how your math teacher be like, show your work. It's basically like all it is. Oh, like bro. All right. So here's what I think it's gonna do. It's coming off a sale right now. It's coming off a sale. This on a 4 hour time frame. And on the 4 hour time frame, the imbalance is bigger. Look at that. Now, you know what else I see? I see this right here. Even though it's been filled already, I see a cube. So where's it going to go? It's going to go down to the cube. It's going to fill the imbalance. Then it's going to come up, fill something right here, and come back down. And if it decides to turn around right here, like it did in the past, if it decides to turn around after collecting all of this, it's going to come back up. Oh, man, I'm just drawing lines. It's going to come back up all the way up here to come take this money, fill this imbalance, and then take this money. That's what I think is going to happen. And my hypothesis is supported. I just explained it. But yeah, if I go over all of L.I.T.S though, I talked about liquidity, imbalances, trends. Okay. All right. Trends. I'm not gonna go all in depth, but I'm gonna just show you what I want. So, what a trend. Here's how you capitalize off a trend completely. See, a lot of people they'll do this. Hold up. Mind you, there's nothing wrong with this. There's absolutely nothing wrong with this. They'll do this. They'll do something like something like this, and then they'll take profit all the way at the end. It's not necessarily what I'm saying do. I'm saying do that, come over, take profit at the end, but then guess what? What did I just do? Move this down there, move this over here. I'm saying do this, do this. I'm saying do this. I'm saying take the trend trade, take all that. You make it catch 200 pips off of this. However, you already know what it's going to do in between. So you might as well take advantage of it. If you know that you're in a downtrend, you know that you don't trade against the trend. So you know that you're going to have a big position right here. Maybe like a little, what you do is you have a small size right here, or low risk. That's a better word. Low risk right here. But then guess what? You about to collect this back in between. Every time it retraces, it comes down, you take a trade. Every time it retraces, you take a trade. You know where it's going to retrace to, and you know where it's going. Because look, a lot of people they say the markets are unpredictable, but in some instances they are. So if I know that it retraces, I know that once it retraces, it's going to go past this point if it's going to continue to be a trend. So once it does that for the first time, I say, okay, it's a trend now. Cool. So you take this, once it retraces, you know where it's going to retrace to. Typically, it's going to be somewhere right around here. And guess what? You take a trade. You know where it's going to retrace to, somewhere around here. So you take a trade. Where's your take profit going to be? Past the previous lower low. Your take profit one is going to be somewhere right here. Just like how if it retraces, your take profit one is going to be someplace right over here. Your take profit two is going to be someplace right over here. Take profit three right over here. But mainly your take profit is going to be right here, the previous lower low. Same thing with an uptrend. With an uptrend, boom, retraces for the first time. You know where it's going. You know that it's going to go past this point. So your first take profit is going to be right here. Anything outside of that is profit. You know it's going to retrace. Where is it going to retrace to? Somewhere along the same lines as the previous higher high. So guess what? You can take a position. Where is your take profit going to be? Somewhere around here. Everything else on top of that is profit. So instead of you just taking one position, hold up, let me do this. So instead of you just taking one position for the entire trend, trade the trend. So look, this is what happened to me one time. I took this trade. I'm gonna take this off a lock. I took one of these type of trades. I took it from down here all the way up here. It was something like 200 pips. Just like right now, 295 pips. However, each one in between could be 60 pip moves, 50 pip moves. And you missed out because you was focused on this. So check this out. You catch 200 pips right here, almost 300 pips. Then you have what? 1, 2, 3, $50 trades. That's another 150 you just capitalized off of. So off of one trade, you took 4 trades instead of one. So it's just about where you place your eyes. Where you place your eyes determine the prize. I'm on my Marvelous vibes. Where you place your eyes determine your prize. You could be winning. You could be standing right next to your breakthrough, but you look in the wrong way. Remember that. You could be inches, you could be pips away from a breakout, but you're looking at the wrong place. You could be pips away from the trading account that you want, but you're just looking in the wrong places. So what I want you to do, because I'm kind of finished. I don't want to go too much more into depth. I pretty much, gave you the basics. You could take that from there. Let's see who stuck around. So Heidi, that was overly lit. But yeah, does anybody have any questions? Why did they talk about fibs? Y'all want to talk about fibs or do y'all want to end it? Y'all want to end it? Y'all want to talk about fibs? All right, cool. I'm gonna teach y'all how to play baseball. I'm gonna teach y'all how to play baseball. There's so many ways to trade in the markets, bro. So many ways. So we talked about trends. We talked about retracements, kind of. But none of these numbers are by coincidence. So it's a downtrend. You're going to draw it from the bottom to the top. You could do it by candle or by wick. This is not the fit. I want to draw it with it because I don't want y'all to be. We're just going to do it like this, top to bottom. So if you look, you see there's a sequence of numbers. You have 886, 786, 618, 50, 382, 236, 115. But for me, I just added to mine 115, 886. Yes, that was. But we're not gonna talk about that, Heidi. Okay, so your major ones 786, 886, 115, 236. If you want to, you could do this. You could do like a little zone. And when stuff retraces, it's typically gonna go here. So when something, so when you're looking at a fib, when it's up here, you trade to down here. Nothing in between. Unless it's like a 50%. That's pretty much the only thing. Like you trade from here to here, from here to here. Now, if it comes here and it retraces, more than likely it's going to retrace to the 50% or the 618. Wherever you see multiple hits, you can see that again somewhere in the future. But primarily when you're looking at a fib, this is what they mean when they say you want to play baseball. Because in baseball, the ball comes to you. You don't go to the ball. Oh, my laptop about to die. Bro, I'm hungry. I know what I want. We plugged up now. We have a barbecue fizz. That's crazy. But from here to here, if it retraces from here, it's gonna go to the 50% of the 618. Let's see. Yo, I wish I had my second screen so I don't have to keep clicking. I just realized what he said, bro. It just hit me. That's how you know I'm hungry. It just hit me. All right. So wherever you see a lot of hits, is you're typically gonna see that in the future. But whenever it hits one of these zones and hits and retraces from one of these zones, it's typically gonna go to the 0.5. Yeah, you could just shoot for the 0.5 or the 50%. So you want to trade from here to here. And if it bounces from here, you look for it to go to the 50%. Just like how I did here. And then in these little things, you can see what we were talking about earlier. So like right here, you can see that. You can see that it came and now it's dropping. You can see here, 50%. Let's see how much that is. And this is on a 4-hour. That's 158 pips. That's almost 160 pips right there, just off of that. So you want the trade to come to you. You don't want to go to the trade. Because if you go to the trade, you're gonna be expecting to make money. And really what the fib is here to do is just to show you where the market is going to go. That's pretty much it. Like, I don't really do too much with fibs unless it's like what we were talking about earlier. But if you want to learn the fib as a strategy, this is the strategy they're going to teach you. It's like this and like this. It's another one that's shorter and it's more, symmetrical with this. But I like the 115 and I like the 886 because we're looking at 886. That's a point in structure throughout the whole thing. If you look at the 115, so is it. Like, look. And that's why sometimes they say fibs don't lie, because they really don't. Because if you look at the 115, you look at the 886, and you look at the 50, look at what you see. Structure, structure, structure. All you see is structure. That's why fibs are important, because they show you where all the points in the market are and their retracements. So that's why you only trade inside of here. And if you're going to trade inside of here, only trade from one of these points to the 50%. So if the market came back down here and was coming back down, I would shoot for the 50%. It comes all the way back down. It comes up. Look, I expect it to come and just continue to trend. Now there are extensions. I don't really do too much with that. I would just trade the trend. But there are extensions. Like if I go like this, you can kind of see it down here. And I'm pretty sure this is a point structure as well. This is where I was slow. Okay. Yeah, structure. So fibs just show you it just gives you an estimate of where the market is gonna go, and you can take positions based off of that. You can use it in a lot of different ways, to be honest with you. Like if I go right here, EURGBP, I go right here. Let's take this trend for instance. You got the top, you got the bottom. You can kind of see what I was talking about. So you got a lot of traffic between the 886, 786, and 236, 115. We've been on here for 2 hours, bro. That's crazy. But yeah. And I'm gonna show you this, and that's the last thing I'm gonna say, but I'm gonna finish this. So you can kind of see what I'm talking about. This trend, if it comes back, look for it, take profit 1 is 50%, take profit 2 is the other side. Comes back here, take profit 1 is 50%, take profit 2 is the other side. So on and so forth. It's almost always going to go there. It's just the when that's tricky. So if it hits down here, it's most definitely going to come up here some way, some form or fashion. It's just a matter of when. Continues down, look right here. Boom. Comes in the zone, I'd shoot for the 50. Your stop loss, if it's down here, your stop loss is a 0. If it comes up here, your stop loss is the 1. And then you just down there. So look, I shoot for 50% of anything. So if I'm doing a zone, I enter at the 50%. And it's at the 1, shoot for the 50. If you want to be a little bit more risky, you can put it up underneath the box. That's totally up to you. But a more, general approach, if you wanted to hit every single time, 50% to 50%, and then 50% to 50%, so on and so forth. So look, it hits down here, 50%, that's one. And then that's not, yeah. And then here, I don't really like to trade like this 382 to this. I don't really like that. Comes in the zone, 50%. You can re-enter here, 50%, 50%, back down here, here to the 50, 50, back down here until it comes back down. If it doesn't close below the zero, it's gonna come back. So look, boom, doesn't close below the zero, it's gonna come back. Take profit one is 50, take profit two. You could do take profit two at 618 and then take profit three back up here. And when you do take profits with these, actually take profit, because sometimes they'll do stuff like this. Sometimes ish they'll do stuff like this, where it'll barely not make it. But yeah, you just want to trade from here to here, from here to here, and if it comes in any of these zones, trade to the 50% as primary take profit, then trade to down here. So it went to the 618, came back. I would have shot for the 50%. So 50 to 50. That's just move 92. And boom, came back. I'll look here. 50, 82. And these are good numbers. These are good, consistent numbers. Boom, right here. 74. 68. And then from here, 155. I was gonna tell y'all about something. Oh yeah, this. So when it comes to a point of structure, it can do this. So any candle has any four ways to go. It could go like this. It can go like this. It can either respect or disrespect the line. But oftentimes, it can either respect or disrespect the line. This is disrespect. The line being a point in structure. Here. Here. Disrespect. Respect. But oftentimes, if it goes like this and it disrespect the line, it's almost always going to come back and retest the line. Once it retests the line, then up and away. Boom. You can see that a lot with fibs. So if you come right here, you notice that like once it passes a line, it comes back and retest. Pass the line, come back, 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 retest. You see it a lot. If it respects it, look, respect. Disrespect, come back, retest. You can see some of the stuff we were talking about too. So just like I said, you can shoot for this, but look right here. You see a cube. Guess what? You saw the cube, you could have took a position off of this. off right here. That's a quick little piece of change. 40 pips. Just off the strip. Oh, yo, we weeded down to 11 people, bro. That's crazy. But yeah, that's pretty much it. I'm not done. Well, throw it. So I'm out of drink. So we're gonna call it a training because it's gonna be about time for the next training in a minute. No cap. Okay, cool. Yeah, I'll call it 15 minutes. Yo, that's crazy. That's how you know you've been on the call for a long time. This one of them Rudy trainings, bro. This one of them Rudy trainings.
I was just gonna say that.
Oh, man. Oh man, y'all got some questions or what? Y'all finished? Y'all through? Y'all ready to go get something to eat?
Need this recording because there's a whole bunch of stuff that you said, but I have no idea what you're talking about. So I'm gonna just need you once that gets uploaded to the cloud, just go ahead and pass that on. Thank you.
You said get something to eat, boy. We done went and got something to eat and ate and shit. By the time the training was over.
Digest.
Oh man, that's crazy, bro. I just thought about that. Like y'all could have went, got some food, came back to the house, ate, and had leftovers in the training still coming on, bro. Hold up. And got the who said the itis?
Is when this meeting started. So we made it though.
I
We held
know,
on longer than a whole bunch of other people.
For real. Nah, they got the itis. They got that hop off the training itis. Hold up. Ooh, who got the clothes?
Keep on the training and let your phone die. Itis.
Oh, hold up. We're gonna go in the chat. Hold up. Where my capital L at? All right. Why is self-correct lots? Who this was a lot, bro. Imagine trying to teach this every week. No, I ain't teaching this every week, bro. All right. So we're gonna go in the chat. 0 people saw it. Okay. But look, let's go in the chat. Richard saw what I saw, bro. Oh man, that's funny, bro. 0 people saw it. Yeah, okay. We're gonna go ahead. We're gonna copy and paste this. Then we're gonna go ahead. We're gonna get it moving. I need something. But look. Hmm.
So he on board. Y'all hear him in the background?
I hear him.
Yeah, going.
Look at my man running. Yeah. Let's go. We're gonna go ahead and we're gonna end it off. Hold up. Let me go ahead. Let me get the OG. Yo, like at 12 a.m. with all the windows down and you blast this, bro, you gonna have a good time. Hold up. Oh, wait. Oh, they don't even got no clean version for this. I don't care. I don't want to hear about Hyundai, bro. When she begging me to it's the OG Migos. Y'all can't even hear.